I can guarantee that if you don't watch this video, you're going to make the two biggest mistakes in investing. How many times have you said, I'm going to start the gym on Monday, and it never happens? This month, no takeaways, and then you order Chinese.
Nice.
Well, these two mistakes are even bigger than that. So if you want to be successful when investing your money, watch this video. Now, the number one that you need to consider is not starting. It might seem simple that you just need to start, but so many people don't. They talk about it, they think about it, they research it, and they never start. They never take their money from their bank account and put it into an investment account. What I mean by not starting is, if you had taken £100 every single month and invested in the S&P 500 since 2000, you would have gone through the following: the dot-com crash at minus 49%, the 2008 financial crisis, and also the global pandemic, which we all recently know what happened there. That means in today's value, you would have invested over £30,000. Quite a lot of money, but it would be worth £80,000 today by doing nothing, holding through the three biggest crashes in modern history. That's without picking any special stocks, timing the market, just buying £100 every month into an S&P 500 tracker. It's not about being ready, perfectly timing it, having all the information. Sometimes it's just starting. Are you watching this now? If you haven't started investing, my biggest piece of advice is just start. It might seem really simple, but more often than not, people never actually get round to it. Think, oh, I will in the future, or when the market's right, or when I've got a bit more money. And it's an old saying, the best time to plant a tree was 20 years ago, but the second best time is right now. And it's the same for investing. So just start. As you start to learn, you'll build more knowledge and build more foundations, and you'll start to become more confident with investing. As that happens, your investments will start to compound over time, and hopefully you'll start seeing a good return. Talk is cheap. Action is what changes your life. And with investing, compounding over time, you can really change your life financially. Now, let's say you have started, you're a new investor and you've just started investing. You're probably going to make the second mistake. Now, the second most important thing is to not panic sell.
Everybody panics! Oh my God!
You might be the calmest person in the world. However, once you've invested £1,000 and you see it starting to drop 10%, 20%, 30%, all of a sudden panic and mania is going to start to set in. You're going to think, I need to stop loss. I need to take my money out before I lose any more. That's what's called panic selling. My main bit of advice here is don't let fear control you. There are going to be times where in the recent pandemic, you see a 34% drop. That means that if you'd invested £1,000, £340 is wiped out really quickly. You're going to think, well, I need to make sure that I don't lose any more. That's the wrong mentality. Long-term beats short drops over time, always. The stock market is volatile, whether that's crypto, whether that's index funds, whether that's buying traditional stocks. There are going to be times where you want to sell. Sometimes it'll drop a little, sometimes it'll drop a lot. The key is don't panic sell. Think long-term, think this is something that I'm going to hold for 5, 10, maybe even 15 years. An example of this is in March 2020, the markets fell 34% in just a few weeks. Now, if you'd sold at the bottom, you'd have missed a 50% rebound just 5 months later. Now, here's the mindset shift. Here's where investors go from beginners to intermediate or expert, right? When you see red, when you see the markets go down, instead of thinking, oh my goodness me, I'm losing money, that's a great buying opportunity. For example, what I mean by this is the S&P traditionally does between 8 and 12% a year. Fine. Okay, well, that's the benchmark. If you buy a stock and it drops 10%, you can buy the same amount of stock at a 10% discount. That's when it goes back up, you've made 10%. There's a great way to capture opportunity when the markets are red. When your stock goes down, that's a buying opportunity. Warren Buffett says it, buy low, sell high. You need to be really strict. You need to think about, actually, this might be an opportunity to buy at a lower price, and over time it'll go up, and all of a sudden you've made money. So that mindset shift is, instead of thinking, I've invested, let's say, £500, and the market has dropped 10%, I've lost £50. The mindset shift is, okay, the market has dropped 10%, I can actually buy more and get a 10% discount. So how do you avoid these mistakes? Well, the first thing is to start early, even with small amounts. Honestly, your future self will thank you if you start early, even if it's £20 a month, £15 a month, it doesn't matter. And by the end of it, you'll thank yourself that you actually started anyway. The second is stay invested. Remember, 90% of the market is noise. Most of the investments, the top investments, go up over time. Whether people are worrying about tariffs or wars or trade options, remember, most of it is noise. A bit of advice is, if you've bought something that has real utility and you think this is something for the future, tech stocks are a prime example of this. Buy it. When it goes down, buy it again. This is called dollar cost averaging. you're essentially lowering the price that you bought it at. And over time, if it's a good stock or a good company or a good index tracker, you're going to make money. You can't control the markets, but you can control your actions. It's a huge one. You don't know what's going to happen tomorrow or the next day or the next day. We can make educated guesses, but you can control your actions. If it dips by 20%, deciding whether to sell or to buy more, well, you're in control of that. History shows that markets always recover. They also make new all-time highs. But you have to be invested to be there. Your job is really simple. Keep investing, stay calm when everyone else is freaking out, and let compounding do the heavy lifting. If you found this interesting or helpful, click the like button, maybe subscribe, and I'll see you on the next video.